Hello again, everyone. It's Vince Four from TradingWinds.com, and this is our update for April 7th, 2019. Let's take a quick look at how the markets finished off on Friday. Before the open on Friday, we did get the employment numbers out, and they were positive. They actually came in slightly better than expected, which was a surprise considering that ADP employment report the previous Wednesday. But regardless, that helped the markets close higher. Once again, the Dow was higher by 40 points. On Friday, the S&P 500 was higher by 13 points, the Nasdaq gaining 46 points, and the Russell 2000 added 15 points. The bond market also traded slightly higher, and the yield on the 10-year note is sitting at 2.495%. Crude Oil Futures also moved nicely higher on Friday, higher by $1.16 or 1.87%. While gold futures managed to gain $1.60 despite a bit more upside in the US dollar. Now, the market obviously has had a pretty decent run here, ever since putting that low back in December. But there is a stat that is fairly concerning, and if we look back from the beginning of this year, we've seen $39.1 billion in outflows from equity funds and $48.9 billion of inflows into money market funds. So that really is concerning. There's obviously some fear out there. People are making a shift out of equities into the money market funds. One of the things that's definitely held this market up is all the buybacks, the company buybacks. But if this continues, if this trend continues, this up move will not be sustainable. And so it's best to keep an eye, especially on potential divergence, which we already see some here on the daily charts, but it's something that we should continue to keep an eye on. So I truly believe the markets are on their way back to these highs, but can we get beyond there? Can we make a push? I mean, Friday's numbers were good, and yet we saw just some modest gains by the end of the day. So there's obviously still some concern out there, and it's something that we should all pay attention to. That's about it for now. Enjoy the rest of your day, and we will see you on our next update.